Hello, hello. This is good. This is good. Good to have you all. Good to have you all. Good to have every one of you. Let me notify um, the people in our Telegram channel. Good to have you all. This is awesome. Yes, let's keep liking. Let's keep liking as because as we have more likes, the algorithm will keep pushing the videos to more people, and so more people can join us. Now, if you can hear me clearly, I want you to type in the comment section loud and clear. If you can hear me clearly, type there loud and clear. So I can know that the audio is good. Loud and clear. If you can hear me, let me see you type loud and clear. Very good. Very good. Very good. All right. Good evening, ladies and gentlemen. It is a pleasure to have you all here. There's background noise. Oh. Oh. But can you hear me clearly? That even with the noise, because I'm trying to get where the noise is coming from. There are a few noise in the background, but I want to know if you can still hear me irrespective of the noise. All right. Good evening, ladies and gentlemen. I want to believe we have ladies here, and it's not only gentlemen we have here. Okay, when I talk, there's no noise. Okay. I think that's great. That's great. So, good evening, ladies and gentlemen. In this broadcast, we're going to be talking about should I buy a prop firm account or should I trade with my own money? And I'll be saying a few things, or some of the things I'll be saying will be from this my book, the Forex Millionaire's Blueprint. If you don't have a copy and you want to get a copy, then check my profile. You'll see my WhatsApp number. That's if you're in Nigeria and you want the hard copy, then you can send me a WhatsApp message. The number is on my profile. It's in the pinned post. You see it there. Then send me a message, tell me your location, and I'll tell you the cost of shipping it to you. But if you're outside Nigeria, you can click on the link on my bio and you can get the soft copy. So, and we're going to be talking from chapter 6, which is prop firms, proprietary firms. So, what is a prop firm? First of all, what's a prop firm? A prop firm is a company that has lots of money, or you want to say that claim they have lots of money and are in need of traders to manage this money for them. That's why we call them prop firm. The full name is proprietary firm. So when a company although let's not get into the aspect of regulations, a company that claims it has lots of funds and need traders to manage it for them, those are prop firms. And okay, remember, this is the introduction. When, as we progress, we're going to get into the core of this teaching, which is the aspect of what conditions is necessary for me to get a prop firm account, and what conditions is necessary for me to fund my live account and forget about prop firm. So this is introduction for the benefit of those who are not enlightened in the prop firm space or trading space, so they need an introduction. So this is it. I said a prop firm is a company that has lots of funds and needs traders to manage the funds for them. That is the simple definition of prop firm. Now, there are two types of prop firms, and if you're new to the space, you wouldn't know this. Number one is the simulated prop firm, which is the most popular ones, the ones that you see their ads every day on social media. They're the ones who keep recruiting traders. They always need traders to trade for them. They keep recruiting traders. These are simulated prop firm accounts. Now, many people did not know this. I think sometime, was it last year or 2 years ago, that this information became popular. So this also brought the debate about whether you're trading demo or you're trading live account. In fact, in some prop firms, as we speak, they still have the tag demo attached to their live account. So this is to let you know that it is a simulated account. So the first type is simulated prop firm account, and the second one is the non-simulated account. Non-simulated prop firm account. Now, or non-simulated prop firm. Now, these actually exist, even though many people don't know that they do exist. There are non-simulated prop firm, and they don't. One way to know that this is a non-simulated prop firm is that they don't run ads like the simulated prop firm. In fact, they don't even run ads, because they try to keep the activity minimal and employment. For you to become a trader there, you need someone to refer you to them, to the management, telling them that you are a good trader. So this is a non-simulated prop firm account, a non-simulated prop firm, which means that they give you real money. Real money, that's what you trade with, and that is how it goes. That is types of prop firm. Then, still in the introduction, we're going to talk about factors to consider when choosing a prop firm. Number one is unlimited trading days. Now, this is one aspect many people, I don't know why many people don't look out for it till now. I strongly recommend that you trade with a prop firm that has unlimited trading days. The reason is because prop firms that have stipulated period of time for you to pass the evaluation, they tend to make you trade under tension. Remember, one thing that causes tension is a maximum drawdown, daily drawdown. Second thing that will cause tension for you is maximum drawdown. Then, if you add trading days, that's maximum trading days, then you have three things causing pressure for you. But when a prop firm is willing to take off one of these pressure, which is trading days, then it is for your own advantage. So there are prop firms that offers unlimited trading days, and I strongly recommend that you trade with such prop firms. Prop firms that don't offer unlimited trading days, I advise that you leave them alone. That's my advice. Personally, I won't purchase an account with a pro firm that don't offer unlimited trading days, because if I do, I'll be putting myself under pressure to pass the challenge within the stipulated period of time. Now, something just came to my mind. I did say that I'll be giving free gifts at the cost of this live broadcast, and I said that the terms for to qualify for the free gift is going to be announced at the cost of this meeting. So the gift I'll be giving is this book. I'll be giving a copy of this book to the person who stays the longest in this meeting. The person who stays the longest in this meeting will be having a copy of this book, and it will be the hard copy, as you can see. So just stay throughout the meeting and you'll qualify for it. All you have to do is pay for the shipping, and I'll send you a free copy. The hard copy is 8,000 naira. This book costs 8,000 naira, but I'll give you for free just for staying till the end of the meeting. And at the end of the meeting, TikTok is going to notify me who stayed the longest, and I will certainly either reach out to the person personally or make a post, and the person will contact me with his information, tell me if he's interested, him or she is interested, and I'll send the book to him. So back to what we were saying. We said that unlimited trading days is the first thing, personally, it's the first thing I will consider. Is the first thing I will consider when purchasing a pro firm account. If they don't offer unlimited trading days, I will not take it. That is me, and that is what I recommend. The reason is because you take off the pressure of meeting the targets within a stipulated period of time. When you have unlimited time to hit the target, you trade under less pressure. Remember, you have maximum drawdown, you have daily drawdown, you also have profit targets to meet. So all of these adds up to the pressures or the things that guides your trading. So when you have unlimited trading days, you have less to worry about. I believe that's clear. Then number 2 is profit target. Now, there are pro firms that offers 8% profit target, some 10%, some 12%. I think 8 to 10% is reasonable. Personally, 8 to 10% is reasonable, and this is what I recommend. Once it gets to 12%, I don't recommend that, because remember, and this profit target for evaluation, remember that the longer you stay in the evaluation phase of a pro firm, the less motivated you are to keep trading. Do you understand that? The longer you spend on an evaluation phase, the less motivated you become to keep trading that account. In fact, it could cause you to start taking irrational decisions because you want to pass the evaluation phase and be done with it. So when the targets or the post is too far, you want to attain it as soon as possible. That's why I say 8%, 10% is perfect. Anything more than that is not very good. It gives you longer time. It makes you spend longer time on the evaluation phase, and you try to avoid that. So profit target is the second thing I'll consider when purchasing a pro firm account. And number 3 is maximum loss. Now, get this point. Maximum loss is the highest amount you are allowed to lose in the account. And in case you don't know, this is the actual amount you are given in that account. So let me break this down. If you are giving $100,000 account, you purchase $100,000 account in a pro firm, and you are only allowed to reach $1,000. That's the maximum drawdown. It means that you have a $1,000 account. There is no sugarcoating about it. That is the fact. You understand? So the maximum drawdown is the amount you are actually trading. So for that reason, it is reasonable that the maximum drawdown be equivalent to the profit target. Let me explain why. If you are allowed to reach, let's say, $100,000 account, you are allowed to reach $10,000, and your profit target is 10%, which is another $10,000. It means the ratio of your risk to reward is 1:1, which is reasonable. It means you are to make 100% of what you are allowed to risk. But when your maximum loss is 5% and your target is 10%, get me, many people don't pay attention to this. It means that if you want to ensure you don't breach the rules, it means you have to take less trade, because you have 5% as maximum drawdown and your target is 10%. It means you have to take less risks in hope that you will make good decisions, and you need to have a good strategy in order for this to work. In order that you make good decisions that will cause you to attain that target. So the ratio of your risks, which is maximum loss, to expected profit, or your profit target, is 1:2. It means you have to make 200% of what you are allowed to risk. I think that is an unfair deal. So the best thing is that the ratio of maximum drawdown should be equivalent, or should be equivalent to your profit target, or the maximum drawdown should be less than your profit target. So 1:1, or 0.5:1, 0.7:1, 0.6:1. This is a fair deal. I don't know if you get me. This, no. Or your maximum loss should be greater than your target. Sorry, that was a slip of tongue. So your maximum loss should be greater than your target, or should be equivalent to your target. Your maximum loss should not be less than your target. Please, I hope you get that aspect right, so that you won't be under pressure, or you won't be in a position where you can't take much advantage of opportunities because you have less room to explore. I believe that's clear. Let's not dwell on that. I think that was number 3. Number 4 is leverage. And if you've been following my channel, you know I've talked about leverage over and over again on several occasions, because many people misunderstand leverage, especially when you're trading a live account. Leverage is something you cannot overlook. Leverage is very important. You can't overlook, you can't downplay it. So in prop firm, how does leverage come in? How is it a factor you must consider? Is that the leverage needs to be reasonable. Mind you, or remember that leverage is an advantage the broker gives you to take position with, or take greater position even with a smaller account. That is what leverage means. Now, coming to prop firm, they've already inflated the figure, or the account size, or the balance. It's already inflated. So you have in your head that you're trading with this much capital. Only because of leverage, you are not allowed to take substantial risk. I don't know if you understand. There are prop firms that offer $1 million account, and the leverage is 1:20, 1:10, 1:5. How does that make sense? And they are expecting you to make up to 10% profit targets. How does that make sense? So you can trade the same account. You see that you have to trade the same account for close to close to a year. Except you are someone who takes huge risks. That can only happen when you have large capital. You're willing to take huge risks and hope that it goes in your favor. Then you pass the account. But leverage, or in fact, with small leverage, you can't even take huge risks. So the leverage needs to be reasonable enough that when you see good opportunities, you can take good advantage of them. Leverage should not be too low that it keeps you trading the evaluation for too long, or even when it gets to the life phase, you are unable to take advantage of good opportunities. This should be avoided. So trade with prop firms that offer good leverage. I once traded with a prop firm that I think the leverage was, I think 1:50 or less. I'm trying to recall. But I remember that I could only take 2 trades with a minimal lot size. That was the maximum number of trades I could take, just 2 with a minimal lot size. So when I lost the account, actually, when I lost the account, I'm going to tell you another reason why I lost the account in the next point, which is that it was a subscription base. So after that month was expired, I never bothered to renew the subscription. I think that particular prop firm, I don't know if they are still in business, but I've not seen their ad for more than 2 years now, and I've not heard anything about them. So leverage is a very important factor you must consider when choosing a prop firm. They should have a reasonable leverage that enables you to take advantage of good opportunities when they present themselves. You get that? And number 5 is monthly renewal, which I passively talk about. There are prop firms that you need to renew is a subscription base. It's not very common anymore. They are on subscription base. So when you purchase them, you have to, of course, when you buy them, they tell you have direct access to a live account and you start trading. They have minimal leverage. Then for every, whether you make profit or you make loss for that month, you have to renew the subscription. If not, you lose access to the account. So I strongly advise against such prop firm accounts. Don't go for them. Buy an account that you own. Once you purchase, you have direct ownership of that account, and you use it as yours for as long as you can preserve the account. I believe that is clear. Any question before we get into the second part of this class, which is on what conditions should you buy a prop firm account? Any question? Any question? I greet you. Great Empire, I greet you. All right, since we don't have any question, let's get into this second part. Okay, there's also another factor. I think this one is a recent occurrence I've seen in some prop firms. Part of the factors you should consider before purchasing a prop firm account, and that is a prop firm that updates their terms and policies frequently just to stack the odds in their favor should be avoided. Okay. Emma is asking me to talk about leverage again. Okay, I'll do that. So, I said that a prop firm that keeps updating their terms and policy every now and then just to stack the odds in their favor should be avoided. Remember, in case you don't know, first of all, the prop firm system the prop firm game is rigged against the trader. Already, it is rigged against the trader. That's a fact. When you get this book, you will see I explain prop firms in detail. Let me read the subtopics under prop firms. Simulated prop firm or types of prop firms which we've explained, characteristics of non-simulated prop firms, characteristics of simulated prop firms, what it takes to run a simulated prop firms, why I don't advise you start a simulated prop firm, factors to consider before buying a simulated prop firm, my advice to simulated prop firm account traders. These are the subtopics under this topic prop firm. So I've explained in this book that already the prop firm game is rigged against the trader. Now imagine firms updating their rules that keeps increasing the odds against the trader. It's not fair. In fact, just the industry standard of prop firm is rigged again. It's not in the favor of the trader. It's in the favor of the owners of the platform. So imagine something like consistency rule and all of those recent updates in their terms that keeps coming up. You know that it is intentional to rig the game against you. You get that? Or what they call, is it copy trading rule or something like that, that two people are not allowed to take the same trade. Why? So just ensure that you go through their terms, understand it, and make sure that you are not trading with a firm that reduces the chances of you passing their or getting payout. They reduce the chances to perhaps 10% or less. You want to trade with a prop firm that at least maintain a fair term, which we could want to call industry standard. Even though we know it is still in the favor of the firm against the trader, it also gives you a better chance of getting payouts. That is what I want to say about that. So let me talk about leverage once again before we get into the second part of this teaching. I said that leverage is an advantage the broker gives you that enables you to take more positions even with a smaller account. That is leverage on a live account, the account you formed with your money. But in prop firms, it's actually the same by definition. But in practice, prop firms tend to reduce leverage, while brokers tend to increase leverage. Because in a live account, the broker profits when the leverage is high. When the leverage is high, as a trader, you stand a greater chance of losing your account when you take advantage of high leverage. Meanwhile, in prop firm, you stand a greater chance of losing your account when the leverage is low. Do you understand? You either lose the account or lose enthusiasm. You lose interest in the account. This is how it is. So, since we're talking about prop firm, let's stay on prop firm and leave the live accounts for now. So when prop firms reduce their leverage, maybe 1:10, 1:20, 1:5, even though you have a huge account size, let's say $1 million, and you are not allowed to risk even 1% in an entire day or in a set of trades, you're not allowed to risk even 1%, then the account size is useless. Are we still together? So you need a prop firm that gives you a reasonable size of leverage that will enable you take advantage of opportunities whenever they present themselves. You know that as a trader, I don't know if I should go into these details, even though it's not part of our conversation. As a trader, there are setups you see, and because you've backtested these setups for a while, you can comfortably risk 0.5% of your portfolio in that singular setup. There are also setups you see, you can comfortably risk 1% of your portfolio on that setup. But in a situation where you are not allowed to risk up to 1% of your portfolio in a singular trade because they've made the leverage too low, then it is rigged against you. It means that they want you to stay trading that singular account for as long as it will take you to lose interest in the account. That is it. There are people who have trade accounts, perhaps had drawdown, and tried to bring it back to break even. They are able to, and they left the account. This is a reality. Pro firms benefit from your purchases, not when you get paid out. That's another topic for another day. So let's proceed. I believe I've explained that aspect very well. Now let's get to, on what conditions should I buy a pro firm account? Are we ready? Are we ready for this? Because this is a great debate. Many people, let's call them influencers. Many forex influencers advise against pro firms, and staff of brokers advise against pro firm, against traders buying pro firm. They tell you, instead of using $500 to buy a pro firm account, use it to fund an account with a broker. Who will not advise that if you have something to benefit from the person's deposit as a staff of a broker? Tell me. So I'm going to give you reasons on what conditions should you buy a pro firm account, and what conditions should you fund a live account. And I need you to make the decision on your own based on your current position. Is it wise for you as an individual to buy a pro firm account or to fund a live account? This is it. So number one is, which is the most obvious one, on what conditions should you buy a pro firm account? Number one is when you have insufficient trading capital. Like I said, this is the most obvious. When you don't have so much money, what can you do? You buy a pro firm account, which will help you. If you can pass it, will help you make money. So insufficient fund is the greatest reason why people buy pro firm account, especially those who buy $5,000 and $10,000 accounts. Let me give this advice. It just came to my mind. There are pro firms that are giving accounts of $1,000, $3,000, and maybe $500 that you can buy a pro firm account with $10. Please, this is a very useless move. It's a very useless move. There is no need purchasing a $1,000 pro firm account. It doesn't make sense in any way. The least you should go for is a $5,000 account, which should cost you somewhere between $50 and $60 depending on the pro firm you're using. So the minimum you should go for is $5,000 account. Leave that $1,000, $3,000, and whether $2,000 pro firm account. It is as good as useless. All right. So we said number one is insufficient funds. When you have insufficient funds, you don't have much trading capital, then purchasing a pro firm account is something you will certainly consider. You should consider. Number two is when you're yet to find a reliable broker. Now, this could sound like a simple thing, or let's say this may not sound like a big deal for people in countries that have strong regulatory bodies. But for those of us in Africa, we know that a well-regulated broker is not easy to come by. That's one. Two, Even brokers that are regulated in Europe, Asia, and America, many of them are not servicing African clients. Then for those who are servicing African clients, they use a different server, which means that when you have issue with a particular broker in Africa, you cannot report them to the regulatory body in UK. If you do, it doesn't make sense. It won't change anything because the regulatory body in UK doesn't have Africa as part of its area of jurisdiction. Do you understand? So this is a great concern. And based on that, it is difficult to fully trust a broker. Like personally, I've had terrible experiences with brokers. I mean, terrible, very terrible. I've lost significant amount of trading capital to unreliable brokers. It has happened to several people. There are lots of people I know that have had this experience. So, not being able to find a reliable broker at the time could be a reason why you should go for a pro firma account. And of course, it means that before you fund your live accounts, please do substantial research. Do comprehensive research. Recently, within the period of that, I think this year, that gold was appreciating or just buying consistently from one week into another, that gold made new all-time high. Many people had issues with several brokers that have a long-standing reputation of being good. They were about to withdraw their money and they couldn't. You see, and there's nothing you can do. The best you can do is come on social media and rant. The next thing the broker will do is release their own press statement. Case closed. Everybody will move on. So, when you are yet to find a well-regulated broker, you could choose to trade with a pro firm and you just have what we call peace of mind, because you will not risk all of your trading capital in one broker as compared to, in one pro firm as compared to the broker. Then number 3 is deliberate intention to minimize risk. If you have a deliberate intention to minimize risk, then pro firm account is what you want to go for. Let me explain that part. Deliberate intention to minimize risk. Let's say you have $10,000 that you want to use to trade. So you have the option of funding a live account with $10,000, which is a reasonable amount, and you can choose to do that and trade your account. You make profit, you make your withdrawal, it's your money. But if you want to minimize risks, remember, based on the fact that we all know that any amount you put in the trading account can be gone. Any amount. It doesn't matter how much. $1 million, $10 million, $1,000 can be lost in the live market. So you tell yourself, I wouldn't want to risk this amount. So how do I minimize risk? You could choose to buy a pro firm account. With $500, you get $100,000 with a $100,000 account with a pro firm, which the maximum drawdown is 10%, which is $10,000, and automatically you have a $10,000 account that you can trade with without risking your $10,000. I don't know if you get me. So that brings you to a position where you minimize risk. That brings you to where you've minimized risk. So you have what you want, and like they say, you've eaten your cake and you still have it. That is it. So when you have a deliberate intention to minimize risk, you can get a pro firm account. And number 4, which many people don't usually consider. It is you want to test a fund manager. Listen, if you have substantial capital, let's say you have $500,000 that you want to commit to a fund manager, do you think it's wise? It doesn't matter the screenshots the fund manager have sent to you about his previous results. It doesn't matter who is recommending him to you. Don't you think it's right that you put him to a test? And what could be a better way to test him than with a pro firm that has strict rules, that if you breach any of the rule, he loses the account? Many people have issues with maximum drawdown and daily drawdown. Let's say a pro firm that offers 5% daily drawdown, 10% maximum loss. You are giving the fund manager, let's say $100,000 account. He's not allowed to lose more than 5%, which is $5,000. That in one day, he's not allowed to lose more than $10,000 overall. Do you think that's a bad thing? Do you think if you commit your $500,000 to this person to manage, will you tell the person, take it to just do your thing? Will you do that? I'm sure not. I'm sure you won't do that. You won't tell the person, just do your thing. You will give the person strict rules, and a pro firm will make it easy for you. A pro firm account will make it easy for you to give him the rules, and he will trade within that rule. Now, within that period you're testing him, you don't necessarily want to make money. You just want to put his skill to test. So you can say, take this $100,000 account, trade it, let me see what will become of it in 6 months. If in 6 months he has passed the account and got payout, then he's a good trader. You can go ahead to hand over your $500,000 to him. But if in 2 weeks he blows the account, you know that you don't want to commit your money to the person. You don't. Because no reasonable trader, no disciplined trader will blow a pro firm account that have 5% daily drawdown in 2 weeks. It's not possible. It's a clear sign of a reckless trader. It's a clear sign of a reckless trader. You don't do that. It's not sensible. Are we together? So a pro firm or a pro firm account is a great way to test the skill of a fund manager. And I strongly advise, if you have substantial capital, and this is for people who have substantial capital, not those, on one occasion, someone asked me to trade was it $10,000 or $5,000 account for him, pro firm. I told him, no, I don't do that. I don't do that. I actually offer passing evaluation phases of pro firm for people as a service, and from $50,000 and above, you can reach out to me. I will pass it for you. I tell you, I give you my terms. I charge 1% of the account size. So if you're giving me a $100,000 account to pass the evaluation for you, I charge you $1,000. That's 1% of the account size. You want me to pass a $200,000 account, 1% of the account size is what I charge, which is $2,000, and I pass it for you. So that is how we do it. We don't do $10,000 account. $10,000 account is a very small account, and you can do that by yourself. We together. Then number 5, you want to beat the game. They were still under what conditions you should buy a pro firm account. If you want to beat the game. Now, funny enough, many people are unable to take it. There are very few people who are able to do this. The pro firm game can be beaten if you have a good strategy and you have lots of money. You say someone gave you $10 to trade. That one you just walk away. You don't even answer the person. No, there's no how. How will you trade $10? Except you want to use it. You just take one trade and wipe it out. Please. That's not something to talk about. So I said that if you intentionally want to beat the pro firm game, then you can purchase it. How do you beat the pro firm game? There are very few people who do this, and these are the people who get the highest amount of payout from pro firms. In order to do this, you need to have a good trading strategy and you need to have huge capital. That's a fact. So you get a number of pro firm accounts. I mean, $200,000 account, $300,000 accounts from pro firms, and you trade risking a significant amount of you risk high. In fact, that's it. You risk high. Either you pass it or you blow it in 1 week. If you pass it in 1 week, then you trade that way, you get good payout. If you can keep up with this, you will make good amount of money. With a good strategy, you'll see that you have more wins than losses, because you already have a good strategy. You pass more accounts than you lose accounts, and you will get more payout. The people who are able to do this are the people who get payout of over $100,000 from one pro firm in 1 month. There are people who have gotten over $500,000 as payout. Do you understand? So you need yes, I get paid upfront. What's his name? Chef Mazi. I get paid upfront before I start trading. That's how I do it. So when I pass it, it becomes your account. So that is how I do it. I believe that's clear. All right. So 1% of the trading capital, that's what I charge. And if it's $100,000, $1,000 is my fee. $200,000 is the account. $2,000 is my fee. So back to what were you saying? Okay, beating the game. So if you have good capital, you can do this. But for majority of African traders who are doing this for survival, you don't want to do that. You cannot. In fact, you cannot. You cannot do it. That's why you see a person will lose a pro firm account and he is taking 3 to 6 months before he can gather the funds to buy another one. If you know that is your financial position, then the account you purchase, you want to trade it reasonably and responsibly, risking little amount of money per time. You don't have to risk much. That is how it's done. So for those who can afford to risk high, these are those who can afford to purchase multiple accounts. There are people who have bought up to 30 accounts, 40 accounts, and they've passed maybe 60%, 70% of these accounts, and they get substantial payout. You see people that the cumulative amount they've withdrawn from pro firm is over $1 million. And you're thinking, how? This is the how. They buy one account, they take huge risks, pass it in a week or two. The next week, they are trading a live account, they take huge risks. Let's say they make 20%, 40% of the account. Imagine making 40% of a $200,000 account. How much is that? That's $80,000. In 1 month, they get the payout. The next month, they do it. The next month, it doesn't matter whether they blow the account. They buy another one. You understand? So those who have the money and have good strategy can do it. That is the way to beat the game. I believe this is clear. If you're enjoying this class, I want to see your hands in the comment section. I want to see your demonstration in the comment section. If you know you're getting my flow, you get the point. Let me see a fire emoji in the comment section. Then number 6, we're still on the conditions before you should buy a Profirm account. So number 6, you want huge returns within a shorter period of time. This is also related to number 5. So let's say, of course, this also relates with people who don't have huge capital. So you want a windfall. You want to get a greater amount out of the market within a shorter period of time, and of course by risking less. So you see, Profirm is the most reasonable way to do that, because if you are using a live account, you will not attain it. You won't make it. It won't work. So let's give an illustration, even though it's going to be a long one. 2 people have $10,000 each, or 10,000 is much, so let's say $500. 2 people have $500 each, and they trader 1 choose to trade, wants to grow his account slowly and steadily by himself. So the $500, let's say he makes 100% in 100% per year. So you see, year 1 it becomes $1,000, year 2 $2,000, year 3 becomes $4,000, year 4 $8,000, and year 5 $16,000. 5 years to move $500 to $16,000. But if trader 2, now trader 2 with the same $500, he buys a $100,000 account, use 3 months to pass it, and month 4 he makes 5% as profit. So month 4, which is now he's trading live account, he makes 5%. 5% of of $100,000 is $5,000. That's first month of trading live account. Second month, another 5%, he makes $5,000. He can buy a $200,000 account from that, which is $1,000. He has $9,000 here and a $200,000 here. So you see that at the end of 1 year, the person who took the Profirm route would have made over $20,000 in 1 year, while it would take the person trading his account personally 5 years to get to $16,000. You see the difference? So I will tell you that the emergence of Profirm in the trading industry is a major financial hack. That is the truth. That's the simple truth. Is a major financial hack, especially for those of us in third world countries. Understood? It's a major financial hack, especially for those of us in third world countries, because we know what it costs to fund a live account. And in fact, even brokers have noticed this. In case you've not noticed, that more people now buy Profirm accounts even instead of funding live accounts. That's why you see many brokers now have Profirm wings, or they now have Profirms. How many of you have noticed that? You see that many brokers now have Profirms. While they are running the brokerage firm, they also run the Profirm aspect. So it is the new normal, and you need to get used to it. So we're done with that aspect. The next aspect is, on what conditions should you fund a live account? So we've been discussing what conditions should you Sorry, I was interrupted by TikTok. Um, I don't know what they're trying to verify. Okay, so we said we're done with what conditions should you purchase a Profim account. So we want to talk about what conditions should you fund your account with your money. That's fund a live account. So yeah, people are saying they've noticed that many brokers now have Profims, and that's the truth, because many people have pivoted into Profim. It's logically right, and that is where the business is going right now. So that's it. So what condition should you fund a live account? Number one, which is also the most obvious, is that you have substantial capital. You have substantial capital, then funding a live account is the best thing to do. And mind you, what substantial capital may mean to me, or the figure that I will consider as substantial capital, may not be the same figure you consider as substantial capital. So this varies with individual, depending on your location, which is number one, your age and your level in life. So we can say that a person in the US, what he considers as a substantial capital is not the same as a person in Pakistan, because the standard of living is high, the cost of living is high in US over Pakistan. This is a reality. It's not me trying to throw shades on people in Pakistan. It's a reality. You get me? So where the cost of living is high, is what we could consider substantial capital in that location will be higher than where cost of living is low. Then what a single person will consider substantial capital will not be the same as what a married person will consider substantial capital. You understand that? Then what else? Okay, we talk about stage of life, age. So the age variation, what a 19-year-old will consider substantial capital is not the same amount a 40-year-old will consider substantial capital. So for yourself, your location, your stage of life, your age, you know what is a substantial capital. And if you don't have that amount, or let me give you an idea. If your 5% of your trading capital cannot meet your daily, your life necessity for an entire month, then you're not trading with a substantial capital. Let me say that again. If 5% profit of your trading capital cannot meet your necessity for the entire month, then you're not trading with a substantial capital. You get that? So 5% of $10,000 is $500. If you're trading with $10,000 and $500 cannot meet your necessity for an entire month, then you're not trading with a substantial capital. So this is why you see people keep funding accounts, or they'll fund an account and over time they'll withdraw out of the account, out of the capital, to meet their daily needs, because they need money. And sometimes they could even make profits, but the profit is not enough. Example, people trading with $100 and $200. Even if they make $50 profit, which is risking a great part of their portfolio, even if they make $50 profit, it is not enough to meet their need for the month. So you'll see them withdraw out of the capital and meet their needs. Then those who are unfortunate will lose a part of the trading capital and withdraw the remaining part to meet their needs, then think of how to raise another capital to fund the account. Are we getting this? So what I consider substantial capital may not be what you consider substantial capital. So know what is obtainable for you and work with that. If you know you don't have up to that, then a pro firm is highly recommended. If we're getting the flow, then I'd like us to tap on the screen. Let's keep tapping. Like I said earlier, the more likes we have will cause the algorithm to show the videos to more people. So let's see more loves and more likes popping up there. Number two condition for you to buy a pro firm account is you're unwilling to go through the hassle of pro firms or pro firm rules and regulations. And let's be truthful to ourselves. Let's be truthful to ourselves. It is tiring to trade a pro firm account. It is a fact. It's a fact. It is tiring to trade a pro firm account, and especially the evaluation phase, knowing fully well that you will go through this phase, irrespective of how much you make. In many pro firms, you're not entitled to anything. And even though some will promise you that on your payout, which will come after you've passed the evaluations and you now make profit on the live account, that they will give you a percentage of what you made in the evaluation phases. Even at that, it is still tiring, because within the period of passing the evaluations, you make the profit, you're not getting anything. Now, the way the human brain works is that when he puts effort, he expects gratification. So you need to suspend your brain. You need to suppress your brain and keep telling your brain that there is light at the end of the tunnel, even though in many occasions you don't even get there. So many people don't have the strength those phases, they are quite challenging. So many people don't have the strength, they don't have the enthusiasm to follow through. It's not easy. It's not easy. It's a fact. So if you're someone who you just tell yourself, I'm not cut out for this. Maybe you've tried it once. You just tell yourself, I'm not cut out for this. You can just forget it. Fund your account with your money and let it go. But if you're able to put yourself through that stress, there is hope. Maybe you will get a substantial payout. So reason number two is that if you don't want to go through that stress, you don't have the patience for pro firm hassle. Then number three is you have a long-term goal and want to grow your account slowly and steadily. So this is true. If you have a long-term goal, let's say you have $10,000 and you tell yourself that you want to grow this $10,000 to $1 million. Perhaps you give yourself 5 years, 10 years, depending on your trading strategy and what you can do. Then you trade with that and you stay on it, you will get there. So if you have a long-term goal and you want to follow through, you will want what's it called? You want to fund your accounts with your money. Then also, there are some people that will want that could ask you to manage the account for them and will ask for a long-term trading history. They could say, I want to see your trading history for the last 1 year, for the last 2 years. If you can't provide it, then they are unwilling to give you the money to manage for them. But if you're trading with a pro firm, remember that when you pass evaluation phase, that account is gone. You pass, let's say, evaluation phase 1, that account is gone. Evaluation phase 2, that account is gone. You cannot present a 2 years trading history from a pro firm, because you must have passed 1 or 2 phases and you can't get that again. So If you have a long-term goal, then funding your account is reasonable. And like I said, you need a good capital to do that. And number 4 is that you trust your strategy wholeheartedly. Hence, you're convinced that you can grow a small account. Of course, you know that this is a function of a long period of backtesting. So in order for you to have high trust for your strategy, you must have backtested it for a long period of time. So when you have this kind of trust for your strategy, you can choose that you want to grow your small account, perhaps $100, $200. You tell yourself that you grow it and you trade your account. But if you know you've not put your strategy to test for a long period of time, don't bother. Don't bother. A small account is very risky. It's a very risky account to trade. Accounts below $500 are very risky to trade because you cannot risk, you can't take proper risk management on such accounts. You will certainly risk more than 2% per trade, and the outcome will not be palatable, or will not be something you want to talk about. When someone asks you how was trading today, you say, I don't want to talk about it. Okay. Then number 5, which is the last reason why you may want to fund your account with your money, is based on previous experiences and personal conversations with personal convictions with prop firms. And this is related to, I think, number 2 and number 3. So if you have previous experiences, perhaps you traded an account. For example, myself, after my forex funds crashed in, I think, 2022, it took me up to a year before I could put myself together to even make the decision that I wanted to buy another prop firm account. You get me? It took me that much. So when you have previous experiences with prop firms that did not go well, it becomes difficult to want to buy another one, except you're someone who is able to easily get over your loss. You easily make such decision and you move on. So except that, it's difficult. So if you a person who has previous experiences with prop firms, previous negative experiences with prop firms, they are unable to do this. Personally, I'm not currently an IB with any broker, and the reason is because I had a previous terrible experience with more than one broker. I think the last one was the most annoying one, and I decided that I won't do these IB deals again. So bad experiences can be a great reason why people make certain decisions, and you cannot talk them out of it. It may not seem logical to you, but it is the way they feel. Their feeling is valid, so their reasons is valid, and they could choose not to do this, and you just have to respect them and let it be. So these are the conditions I will recommend. If you find yourself in any of these conditions, you know what to do. If you have the conditions for funding a live account, you could choose to do that. You see yourself in position that buying a prop firm account is reasonable for you, then you can do that. There is none that is greater than the other. A person who is trading a prop firm account is not cannot tell himself or cannot claim that he's a better trader than the person trading a live account. Neither can the person trading a live account claim that he's a better trader than the person trading a prop firm account, because these two accounts have their own advantages and disadvantages. They have their own loopholes, and one of the greatest issues that traders have is ability to withdraw their profits, and this issue exists both in brokers and in prop firms. So Who can brag over the other? None. There's none that can. If we have both of us had the same base level difficulties or challenges, possibility of challenges, then nobody stand a chance to brag over the other. So ask your question. This class have lasted for more than an hour. I think an hour 10 minutes. We started by 1 minute after 9. I thought I'll be able to keep it within 1 hour, 10 minutes on top, 11 minutes now. So ask your question. You have any question, ask your question. Let me answer at least one question before we call it a day. Then when we end this class, I'm going to check the person who has qualified for these gifts, the person who has qualified, and the person will have it. I'll reach out, or I will announce the person on my page, maybe tag the person, and he can tell me how he wants it. Prop firm I will recommend is FTMO. The reason is because it is the longest standing prop firm within my knowledge, and I hardly hear any issue about them. That's why I would recommend FTMO. Longest standing, and I hardly hear any issue about them. Other prop firms are more of fly in the nights. They could be booming today, tomorrow they are not. They could be doing well today, tomorrow you hear someone complaining about one thing or another. So I usually recommend FTMO. I do. So if you want to get this book, you want the hard copy, send a message to my WhatsApp number. You can find my WhatsApp number on my pin post. You go to my profile, you see the pin post where you see this book and my other book, Trading Without Tears. Then send me a WhatsApp message and I'll get. So to get the hard copy is 8,000, the soft copy is I think 6,000. So if you're within Nigeria, you can order for this. You're outside Nigeria, get the soft copy. Requirements for FTMO is, if by requirements you mean their rules, I think 5% daily drawdown maximum, then 10% maximum drawdown, then profit target is 10%, and that's it. Good funded, I think, is still new. The first time I saw their ad was last year, either November or December. So it's still new. If you choose to trade with them, you can also go with them. So, but I'll say it's still new. All right, ladies and gentlemen. Okay, before we draw this, we bring this to an end. Can one person or two people, just anybody, share in the comment section what you learned at the course of this training? What did you learn, and what's your take home? What you've learned at the course of this meeting? Just 1 minute or 2 minutes for that, and we're good. Let me see. What did you learn that you really appreciate? My eyes is on the comments. So, talking about this book, while we're still looking at the comments, yeah, types of profits and their leverages. Okay, good. That's a good thing. So this book, I recommend this book mostly for those who have already started trading and you want to build a business from trading. I recommend this book. You're not someone who is still trying to find which strategy or which system to trade with. This one is not for you. Okay, advantage of profit and live account. So I have a book, Trading Without Tears, which I explain strategy, candlestick pattern, chart pattern. I explained this one in Trading Without Tears. While in this book, I explain the business aspect of trading. You want to build a business from trading. You don't want to be just a trader. You want to build okay. Yeah, so profit target is a very good thing to consider. So you want to build a business from trading. I strongly recommend you get this book. This is the Forex Millionaire's Blueprint, and you'll be glad you did. So the topics I discuss in this book is starting from zero, Forex Academy, how to run a Forex Academy. Starting from zero, I talk about how to start from scratch, even if you don't have experience in business or in trading, and if you have experience, you can also how to start from zero, both in terms of capital and in terms of trading experience. You can we discussed that here, starting from zero. Then Forex Academy, that's chapter 2 is Forex Academy, how to start and run a Forex Academy, the things you know, the mistakes to avoid, how to grow, how to scale. Then Signal Provision is chapter 3, how to run a signal firm, the things to avoid, the things to look out for, and how to manage clients and the others. How to do signal business in small scale, like you see people have Telegram groups, and how to do it in a large scale. We discussed that here. Then chapter 4 is market analysis and content creation. How to be a successful Forex content creator. One of the reasons, if you have checked my page, you see that my videos dwell on educational aspect of trading. That's where my video dwells on. Why I got into that aspect was because as at the time I started trading, majority, more than 90% of Forex influencers were showing only lifestyle. So if you want to learn from them, it's difficult. All they do is refer you to their course, refer you to their signal, and you can't learn anything from their platform, from their pages. So I thought it is reasonable. Okay. Yes, avoid problems that keep updating their terms of service. So I thought it is reasonable I thought it's reasonable to build a platform or build a page that people can learn from. As a beginner approaches my page, he can learn something. He doesn't have to see pictures of my house, my car, and all of that. So that was how I decided to get into content creation to bridge this gap. And now the number of us have increased as compared to the time I started. So if you want to learn how to do this, how to create unlimited content and all of that, there are people who keep telling me that every time they come on social media, they look for my content, and they always have something to learn. I keep posting every day. I don't run out of good and inspiring content to post. You want to learn how to do that, then I explain how to do that here, and how to build a business as a market analyst or content creator in the Forex space. Then chapter 5 is hedge funds, how to run a successful hedge funds, how to build your terms and the rest. Then profit, which we discuss out of it, and account management, how to run an account management business as a forex trader. So you want a copy, send me a DM or click on the link on my bio to get the soft copy. So, ladies and gentlemen, it was great having you here. I believe this was a great session. I believe you learned a lot. Yeah, thank you. Thank you for sticking around, and hopefully we're going to have another live session sometime in the future. um I'll try. I'm hoping to start being more, um doing more broadcasts, more live sessions, that's more frequently. The last time I went live on TikTok was, I think, 2 years ago, if not 3 years ago. So I'm thinking of doing this more often again. I believe it will be beneficial and educative for many of us. So we'll draw the curtain here, and the winner of the book will be announced soon. Thank you, and see you another time.